Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 15th of August 2020 and we're publishing our Gold and Silver Weekly Update for the week ending the 14th of August. Gold fell $90 last week from $2,035 to $1,945, having hit a high of $2,050 and a low of $1,865, a fall of 4.4%. In sterling terms, gold finished the week at £1,485. That's down £75 or 4.8%. And in euros, it closed at €1,642. That's down €84 or again 4.8%. Silver fell $1.87 from $28.33 to $26.46. having hit a high of $29.43 and a low of $23.51, a fall of 6.6%. In sterling terms, it closed at £20.22. That's down £1.50 or 6.9%, and in euros it closed at €22.34. That's down €1.70 or 7%. The gold to silver ratio rose from 71.8 to 1 to 73.5 to 1. Bitcoin, incidentally, is up $136 at $11,884. The Dow Jones closed on Friday at 27,931. That's up 34 points on the day and up 498 points on the week. The S&P closed at 3,372, down 1 point on the day, but up 21 points on the week. And the Nasdaq closed at 11,019, down 23 points on the day, but up 9 points on the week. Brent crude closed at $44.80, up 40 cents on the week, and WTI crude closed at $42.01, and that's up 79 cents on the week. The dollar index stands at 93.09, down 0.34 points on the week. Now, our conclusion from last week's update stated, quote, "What can we expect this coming week? Well, as far as gold is concerned, we expect a slight respite and consolidation, at least until Wednesday, and silver similarly." Well, we did see gold fall, reaching its week's low on Wednesday morning and then promptly recovering some $70 later on that day, having fallen almost $185 up until then from its high, and then gradually oscillating in a positive way from Wednesday onwards for the rest of the week to end up down $90 for the week. Silver reflected a similar situation, with a disparity between high and low standing at almost, not far off in fact, $6, with silver moving into the territory, well into the territory, of between $23 to $25, at which point we stated one should consider buying, especially the closer to $23 one could get, the better, and in fact silver did in fact dip as low as $23.51. There were a number of influences on gold, including, in our view, a degree of profit-taking, of course, which actually countered some expectations, particularly as the dollar failed to show any significant strength this past week, and bond yields overall did remain low, although they did vacillate during part of the week, particularly the earlier part, which is why, of course, prices fell so significantly. From a technical point of view, resistance is seen at near the 10-day moving average of $1,987, just below that crucial $2,000 level, which we personally quote, although technical analysts will condemn us for it, as a stronger resistance line, because we see that as more psychological. And support is seen at the 50-day moving average of $1,839. Although short-term and medium-term momentum have turned negative and the MACD points to a sell signal, the momentum index is decelerating, which does suggest a period of consolidation. So whilst lower prices may indeed be on the cards very short-term, From a technical point of view, the downside does appear at least to be limited to around $100 from current levels. Silver has analysts debating the timing of a breakout, but a number do believe a breakout to the upside will occur. The weekly candlestick for last week was indeed quite sizable. There's resistance at $27.75, and then again at recent highs of $29.85, with intermittent resistance points in between. Support, though, is seen near the $26.20 level, though we would prefer to be cautious and claim it is more likely to be effective at the 20 EMA of $24.95. Now, we have to be mindful that the US dollar value is going to be, and continue to be, an important determinant moving forward. Whilst we would argue that the presidential election too will have quite a significant impact, it's a little too far away right now for that to be in any way decisive or even the most important catalyst. Now, looking at the trading figures this coming week, or the data announcements this coming week, we have on Monday NAHB Home Buyers Index for August. On Tuesday, housing starts for July and building permits for July. Wednesday, the FOMC minutes from the 28th to 29th July meeting. And on Thursday, we have leading economic indicators for July and, of course, the much viewed now weekly jobless claims. And on Friday, the market manufacturing flash PMI for August and the market services flash PMI for August, plus existing home sales for July. So Wednesday's minutes should be useful, plus the jobless data on Thursday and the flash PMIs on Friday. Now, Bloomberg published an interesting commentary yesterday re gold. Now, we won't read all of it, but just some pertinent excerpts. And some of this will equally, of course, apply to silver. Quote, gold posted its first weekly drop in more than 2 months after being buffeted by climbing real yields, profit-taking, and uncertainty over US-China trade talks. Bullion is ending a week filled with big price fluctuations on a relatively tame note, trading at more than $100 an ounce below last week's record, after dropping the most in 7 years on Tuesday. Both gold and silver spot prices are heading for the first weekly decline since June the 5th and the biggest since March. The rally in gold, which has surged this year as central banks worldwide took steps to shore up ailing economies and real yields turned negative in the US, is countering some turbulence with a sell-off in treasuries and a stalemate in US stimulus talks. Data Friday showed China's economic recovery continued in July, and US industrial production increased for a third straight month, further dimming the appeal of bullion as a haven. The washout we saw earlier this week was sort of taking the froth out of the speculation in gold, Matthew Weller, global head of market research at Gain Capital Group LLC, said by phone. Even with the decline, gold is still up 28% this year. Credit Suisse raised its gold price forecast for next year to $2,500, seeing a perfect storm of factors pushing bullion to a new high. On Friday, a report showed US consumer sentiment remained weak in August amid expectations for a bumpy ride ahead for an economy coping with an unfettered coronavirus pandemic and widespread joblessness. And a meeting expected between China and the US to discuss progress on the first phase of their trade deal was postponed indefinitely. An index of the dollar fell for a third day. Barring further profit-taking, we think the longer-term uptrend is intact, given US dollar weakness and the scale of stimulus, and as we expect interest rates to remain low or negative. Suki Cooper, precious metals analyst at Standard Chartered Bank, said in a note, price dips are likely to be viewed as buying opportunities as the macro backdrop remains favourable for gold. All the conditions for a favourable gold price environment are present. Jake Klein, Executive Chairman of Australian producer Evolution Mining Limited, said in a Bloomberg TV interview on Friday. The geopolitical tensions, the COVID pandemic, and the impact that's having. Unemployment rates are rising. These are all unfortunate circumstances. Unfortunately, gold is a beneficiary of those times. Gains Capital's Weller said he's watching stimulus deliberations in the US Congress for an indication on gold's direction. For me, it's all about fiscal stimulus, Weller said. Congress will act when the market forces them to. So if we see stocks come off a bit, that could increase the pressure. And once people start getting evicted and once the unemployment payments drop off severely, I think that's what could cause Congress to act, and therefore put some wind in the bull sails when it comes to gold. Unquote. Now that's the end of that portion of the article. So, it certainly appears the bull trend for gold is still established, and of course silver is likely to follow suit. So this coming week, providing there's no real political turmoil other than the usual back and forth, one can perhaps continue to expect to see a degree of consolidation of precious metal prices. And of course, we should be looking out for any agreed stimulus packages that Congress and the President presents. Our view is that if gold and silver do fall back, then they present a great buying opportunity as they dip, providing you heed our normal caution to take a medium-term view when buying. Now tomorrow we shall talk about Berkshire Hathaway's investment in Barrick Gold Corp, which was revealed yesterday, and what we should glean from such a move, because we all know that Warren Buffett has not been a major investor in gold and silver, and certainly not on a regular basis. So this move is quite interesting. What do you think? Do share your thoughts. Thank you so much for listening, and if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. Not, of course, forgetting that we update our Richard and Greg channel every few days. And again, if you haven't done so, please subscribe to that one too. We may discuss there some very divisive and opposing issues, and we appreciate that a number of you may not agree with them. But it is important to sometimes listen to views outside one's normal bubble, because that way we all learn. And even if you disagree with us, it does not necessarily mean that the subject shouldn't be totally ignored. Thank you once again. Have a great weekend, a safe weekend, and as always, a prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.